how to maximise the benefit to my children when I die. So we're talking about superannuation assets. How do I maximise the amount that will be passed on to my beneficiaries in the event of my death? And with superannuation, defined as different components. So your superannuation is defined in terms of taxed components and tax-free components. Now, all your employer contributions, salary sacrifice contributions, and personal deductible contributions, they're what we call concessional contributions, like I've been talking about throughout the evening. These concessional or taxed elements, if they're passed on to a financial non-dependent like adult children, they're taxed at 16.5%. So if you die and the money's still in super and it passes on to your children and they're not financially dependent on you, then that portion of your fund is taxed at 16.5%. Post-tax contributions, like the $1,000 that you might have been putting into your super fund to get access to the government co-contribution, that portion of your super is what we call non-concessional contributions, and they're defined as tax-free elements. If they pass on to your children that are not financial dependents, it comes to them tax-free. So the question is, how do you increase the tax-free portion, these portions, and decrease these portions? We'll walk through that now. But firstly, let's look at an example. We've got $120,000 in our super fund, $100,000 in tax components. If that passes to a financial non-dependent, that's going to be taxed at 16.5%, and so the net amount that will go to the dependents will be $83,500. If you've got $20,000 within your fund that's tax-free, then it'll go totally tax-free. So the net benefit to your children will be $103,500. Now, what you can do to reduce those what we call tax components and increase your tax-free components is a cash-out recontribution strategy. Basically, what it means is that with your super fund of $120,000, you withdraw the funds from it and deposit it into your bank account. So you just withdraw it all, deposit it into your bank account. It then is just cash in your bank. You then put the money back into your superannuation fund, so you recontribute it back into your super fund as a non-concessional contribution. There's no tax payable on it when you put it back into your super fund. It then is defined as what we call tax-free components. And then, if that money then passes to your financial non-dependents, your adult children, then the full amount will pass to them and they'll get the full $120,000 and they won't have to pay the $16,500 contribution tax. So it's a strategy that we often think about prior to retirement, around that 65 or prior to 65 generally, to ensure that you're maximising any benefit that could pass to your children. Now, there are some considerations, and the key one here is what we call anti-detriment benefits. And if you do this cash-out recontribution strategy, it means that you're not able to get access to what we call these anti-detriment benefits, which might potentially, in this scenario, it might have meant that if the money passed to your spouse and therefore passes to them tax-free regardless of the components, they might have been able to boost the amount that they pass to your spouse because of what we call anti-detriment benefits. The taxable component means that you can get a little bit more money going through to your super. But often we do the cash-out recontribution strategy because it's more certain. You need to also be aware that if you withdraw the money and you're under 60 years of age, you need to factor in any tax that's payable on your super. You need to be eligible to contribute the money back into super. You need to be within the contribution limits, and you also need to factor in your contribution limits and if you're going to get an inheritance. If you do the cash-out recontribution strategy and then get an inheritance that you didn't expect, you might not be able to get that inheritance into the concessionally taxed superannuation environment. So just a few factors to consider there.